or accounting system. So what we're going to do is we capture it in the journal first, and then we will move it to the general ledger account, and then from there we will do a simplified trial balance. Okay, now let's talk about cash flow and your business basically. So the main purpose of any business, with the exception of your non-for-profits, is to actually make a profit and to increase their level of owner's equity. So an owner wants a business to grow and expand by making profit and indirectly also growing their wealth within the business. But we need to monitor the cash flow movements of a business. It's very important because we can be making huge profits in our business, but not make any cash flows, which could lead, and they call this one of the big liquidity traps that most companies fall under, and then they have to close their doors. It's because of the fact that you're not managing or monitoring your cash flows. A lot of those companies will have to close their doors after a year or two because of the fact that, yes, they are making major profits, but they're not necessarily seeing the cash to sustain them. Now remember, a small business has very little cash resources. So they basically live from day to day expenses, whereas your bigger companies have already built a big reserve that can see them over for a 6-month to 12-month period. And that is why so many small businesses generally fail within the first year of starting. Now I said there are different types of journals. So now we're going to look at each of the journals and just briefly explain what they are. Now what I want you guys to note, make sure that you take note of the abbreviations. These are the abbreviations we use in this module, and these are also the abbreviations that will be marked in a test. Please do not give me your own abbreviation. We've got set abbreviations that is applicable. Okay, so the first one. So the first two is what Learning Unit 4 is about, your cash journals. Now the first one is your cash book receipts, which is abbreviated CBR. Now this is transactions that would cause your bank account to increase. So that is normally money that we receive. Now the source documents that we could potentially receive when we get money into our bank account, we get a duplicate cash slip, a duplicate cash invoice, or a duplicate invoice. Now, important to note, when we receive money, we have duplicate information. Now, why do we have the duplicates? Because we give the originals to our customers, okay? So that's why we use duplicates for the cash book receipts. The cash book payments, which is your CBP, is transactions that will result your bank account in decreasing. And the type of document you would see there is check counterfoils. Now this one is not used as often anymore, but we still explain it because of the fact that when you get to the second semester and we do bank reconciliations, it is good to know that how a check works, and because of the fact that those are generally one of the reconciling items. Then EFT confirmation slip. So that is if you make an online payment through your banking app or on your banking system, you would get a payment slip or confirmation slip. So we call that an EFT confirmation slip. Okay, then another type of cash journal that you would see, we call it a petty cash journal. You remember that box that we talked about that a business has with a few hundred rands in it? That is your petty cash. Now for that, we also create a journal to account for all the money that goes in and out of it. So this is generally for purchases from the petty cash box, and we would issue a petty cash voucher for each transaction that occurs. Then the other ones that you need to be aware of, and these are the ones we will focus on in Learning Unit 5, which is your creditors journals. Credit journals is your creditors journal, your CJ. This is for any credit purchases of any products or services. Now I want you to make a note. It's credit purchases, not cash purchases. Cash purchases will fall under your cash book payments. Okay, and here we generally get the original credit invoice. So our supplier will give us the original documentation. A creditors allowance journal, the CAJ, is where we returned goods back to our supplier, either because they were inferior of quality or there was something wrong with them, or we asked them for a rebate because something was not 100% correct in the specs of our product. And then we would receive a credit note to reduce the value of what we've paid. Debtors journal, that is my customer. Any credit sales to customers, we only account for the trading inventory information there. So we've got our debtors journal, and that's a DJ, and the type of documentation we receive is a duplicate credit invoice. Okay. Then debtors allowance journal, similar to the creditors allowance journal, the DAJ, is for any returns from our customers or if they want rebates because they felt the product was not what we've advertised. And we would use the duplicate credit note as our supporting document because we would have given the original to our customer. Then the last one for now is the general journal, the GJ. This is any type of transaction that does not fall in any of the other journals that we've discussed. So it's not a cash transaction, it's not a petty cash transaction, it is not a credit transaction, whether debtors control or creditors control, then it will fall in here. And our supporting document or source document would be a journal voucher. Okay, before we move on, do you guys have any questions on the different types of journals? Do you have any questions so far? Okay, so let's continue then. Okay, so what we're going to do now is I've broken this exercise into smaller spaces. So we're going to start with this one first, and then we'll do the rest of the question. If you've got a textbook, it is on page, let me just page there for you, on page 108. So I'm just going to type here, page 108 in the textbook. Okay, so what you have to do is we've got a number of words here at the top. We've got petty cash, cash book receipts, cash register roll, a cash invoice, a duplicate credit invoice, a duplicate cash invoice, debtors, debtors allowance, petty cash voucher, creditors allowance, a receipt, general receipt, credit note, creditors journal. Okay, so what is required from you is you have to take these words and you have to go and complete these sentences. Now remember, you will not use all of these words on this one because there are still more line items that is not currently being shown on the screen. So what we're going to do is we're going to first look at the first four. You can type for, we'll do number 1 and number 2. So what I want you guys to do is go through number 1 to 4. I'm going to give you 5 minutes to just familiarize yourself with this information. And then we're going to discuss what do you think the answers are for number 1 to 4. And then we'll look at number 5 to 8 then on the next slide. If you've got any questions on what some of the source documents are, you are welcome just to ask me, or in the chat function, I am available to assist. Okay, so I'm going to give you 5 minutes to quickly go through this, and then we'll discuss this. Okay, so do you guys have any questions? Are you ready to start, or do you need a few more minutes? Just indicate in the chat function. Just let me know in the chat function. Do you guys still need a few more minutes, or do you want to discuss it and we fill it in? Okay, so Nasiri asked if we can get 2 more minutes. Okay, so I'll give you 2 more minutes. If anyone's got questions, you're welcome to ask me while you are busy with this. Okay, so let's have a chat and see what did you guys come up with. Okay, so the first scenario says a client enters our store and purchases merchandise, which she pays for in cash at the counter. Our bookkeeper must record this transaction in the cash book. And which of the cash books would our bookkeeper have to record this? What do you guys think? What answer did you write down? Yes.
Ma'am, I said cash invoice.
Okay, so you said cash invoice.
Yeah.
Okay, so remember they ask here in what will it be recorded. So the first thing you have to do is first have to identify what journal are we looking at. And then the second answer from what would be the cash invoice. Okay? So you got some of the answer right, but let's first start with, and which journal would we capture any cash receipts? Okay, so I see Nicholas says cash book receipts, Lino says cash book receipts, Refilwe says cash book receipts, so that is correct. And then your answer comes in, which is the cash invoice. But remember, it will be a duplicate because we would have given it to our customer. What other document could we potentially also use to capture any cash transactions? What other document do you think we could also use to capture any cash transactions? So the one is the duplicate cash invoice. What other item on there do you think might we use? Okay, receipts. Okay, so you're on the right track, but we don't call it a receipt from our point of view. So the customer would have a receipt. As a business, we call it, okay, so the first one would be cash book receipts. Then we would have our duplicate cash invoice or a cash register roll. So the receipt that is printed for an individual. So the receipt you receive. The business actually, we call it a cash register roll. We'll have a roll with all the receipts on that. And that is what we call the name. Okay, so in that case, instead of a receipt, it would be the cash register roll. Okay, let's look at number 2. A client enters our store and purchases merchandise on account. If I buy something on account, what does that mean? Let me just repeat that. If we buy something on account, what? Okay, yeah, someone's mic is on. Do you want to answer the question, please? Okay, Zandile say you buy it on credit. That is absolutely correct. Okay, now let's read further. Our bookkeeper must record this transaction in the what journal and what document would they use? Okay, if we've got credit purchases, what journal do you think we will use? Okay, so Lino says creditors journal.
Creditors
Syria
journal.
thinks it's a debtors. Nicholas thinks creditors. Okay, now remember creditors journal is when I purchase something on credit. Debtors journal is if I buy something from my supplier on credit. Okay, so this talks about a client. So it is our client that bought something at our store. Okay, so it is the debtors journal in this scenario. Okay, so I know you have to read it twice to make sure you get the right one because it all depends on which view you take it from. Okay, what document would our bookkeeper use to capture the transaction? Yes. Can put on your mic and give us the answer?
Um, would it be the debtor's allowance?
No. So remember the debtor's allowance is if we return something. So I'm asking you what document would we have as evidence that our debtor actually purchased something from us? Okay, Maria, yes, it would be a credit invoice, but remember it would be a duplicate credit invoice because of the fact that we gave the original to our customer. Okay, so in a test, we would mark it right if you wrote invoice or credit invoice. But if they ask you specifically to indicate if it's a duplicate or original, the rule of thumb is if I gave the document, it would be a duplicate. If I received the document, it would be original. That's how you remember it. Okay, let's look at number 3. A tenant pays his rent in cash. Okay, so it's our tenant. The tenant is a registered VAT vendor and uses our building for business purposes. Our business needs to issue a what and record the transaction in the what from the duplicate. Okay, so what document would we issue our tenant that they've paid and where would we record that transaction? So what document would we give our client or our tenant to show that what they need to pay and that they've actually paid it? Yes. You can put on your mic and give
Uh,
us the answer.
okay, ma'am. So I got kind of confused. So I chose duplicate credit invoice.
Okay, so you said a duplicate credit invoice. Okay, so you were halfway correct. I see your fellow colleagues in the chat function says it's a cash invoice, which is correct. So remember, if we buy it on account, it would be a credit invoice. If they pay us cash, it would be a cash invoice. So just remember on account or on credit would be a credit invoice, cash invoice. Okay, so that's correct, guys. So it would be a cash invoice. And we would capture it in what journal? In what journal do we capture cash transactions? Okay, Zandile is asking why is it a cash invoice? Okay, so Zandile, if you read the beginning, it says a tenant pays his rent in cash. Okay, so normally when you have a tenant, you would issue them an invoice and they would pay you. Okay, now because of the fact that they are paying cash, we just call it a cash invoice. You could have also said an invoice would also have been correct. Okay, Sandile, does that answer your question? Sandile, did I answer your question or do I need to re-explain it? Okay. Now remember, if we've got a cash invoice, we would then record that transaction in what cash journal? Which one of the two cash journals would you expect to see it? Okay, so Lino says the cash book receipts. Ompile says cash book receipts. Yes, you can put on your mic. Okay, so the answer is cash book receipts. Well done, guys. Okay, let's look at number 4. Our business buys goods and services on credit from a supplier. We will receive an original tax invoice from the supplier, which our bookkeeper must record in the. So where do we record any credit purchases from a supplier? Okay, so where do we record credit purchases from our supplier? Okay, so Nicholas, you are talking about a source document and not the journal we are referring to. And just remember, if it's from a supplier, in the question they actually talk about an original tax invoice. So remember, our supplier would have given us the original to capture. The duplicate credit invoice would relate to a debtor, so that is our customer. Okay, Maria says in the creditor's journal, and Zandile as well, and that is correct. Okay, so just remember, debtors links with sales, credit sales to our customers or our business clients, whereas creditors links to our suppliers where we buy something on credit. Okay, make sure that you understand what the difference is between a debtor and a creditor. This is one of the biggest things where students lose marks, is they capture everything absolutely 100% correct in the journals, but they capture it in the incorrect journal and then you get 0. Okay, so make sure that you understand the difference between the two. Let's go on with the question. So let's see what the rest of the question says. Okay, so we've got 4 more items. Okay, I see I didn't put the top. I'm just going to put the previous screen. Do you just want to take a photo on your phone so that you have the words at the top for the next part of it? You can just indicate in the chat function when you guys are ready, then I'll move on to the next slide. Okay. So let's go through the next question. Okay, so we are unhappy with the goods purchased from the supplier in number 4 and return the goods together with a complaint, goods return note. The supplier agrees to credit our account and issue a what? Okay, so what happened? We bought the goods from our supplier. We said, we are not happy with the goods we received, and we actually sent it back. Now, what document does the supplier give us to show us that these goods have been returned? Okay, Zandile says a credit note. That is absolutely correct. And in what journal will our bookkeeper record the credit note? Okay, Zandile thinks it's the debtors journal. What do the rest of you think? Mpile thinks it's the creditors allowance journal. Okay. So one is correct, one has the incorrect journal. The rest of you guys, which one of the two do you think is the correct answer? Okay, Maria also thinks credits is allowance. Okay, so let me explain the two different journals, what they were for. So debtors journal is to capture credit sales to customers. Okay, so it's sales of goods and services. Creditors allowance is to capture purchases previously done on credit that was returned or a rebate was received. Okay, so for that reason, Zandile, it would be the creditors allowance. As soon as you return something, you look at what was the previous journal that you've used, and then you just go look for the allowance one for that. Okay, that's just to help you get the correct one in a test or in the assignments. Okay, then number 6. The debtor in number 2 was unhappy with the price we charged on the transaction and request a rebate of 50%. Now, a rebate is basically a discount. We grant this discount and issue a what to the customer? Okay, so if we give the customer discount, what document would we give them to show that we have reduced their account balance? What document would we give our customer to show that we have given him discount or that we've granted the discount? Okay, Maria asked, is it a voucher potentially? What else do you guys think? Okay, it would be exactly the same as what a creditor would have given us. So it's a credit note, okay, which shows that we are reducing the balance. A voucher would be if it was the debtor was declared insolvent and we had to write off the balance. Then it would have been a voucher. Okay. So for this one, it's a credit note, guys. Okay, let's have a look and see what is the rest of the sentence. Our bookkeeper records this entry in the what journal? So in what journal did the bookkeeper record this transaction? So the rebate that we've given to our debtor. Okay, if we give a rebate to our debtor, in what journal would we capture that information?
Would it be the debtors journal?
Okay, so you're halfway there. It is a debtors journal, but it's not the one you think. Okay, so remember the debtors journal is where the original sale would have been captured. So that is where the original sale is done. So when they return stuff, our debtors, or we give them a rebate, we actually put it in the debtors allowance journal, which is specifically made for rebates, for discounts, for returns. Okay. Then now our debtor has actually paid his account. So what document do I give someone that pays me to confirm that the money was received? You guys had this answer previously. What do you give your debtor to tell him, I've received your money?
The duplicate.
Okay, Zandila asked a duplicate invoice.
Wouldn't it be the original, and then we'd have the duplicate?
Will it not be? Sorry, just repeat that.
Ma'am, wouldn't we give them the original invoice and then we'd keep the duplicate?
Okay, so remember in this scenario, they've actually paid us now. So we would have given them the credit note to show the discount. They've already received the invoice previously. So if they pay us at that same time, we would actually give them a receipt as opposed to the invoice. The invoice is where the transaction and the payment happens exactly the same time. So with this one, there were a few different things that happened. So first we issued the invoice to them. Then they asked for a discount. We gave them the credit note and then they paid us. So then we only gave them a receipt. Okay. So in this scenario, it would have been a receipt and not an invoice. Then number 7, any purchases made from money in the petty cash box will be recorded in what journal after completing what document? Okay, so any petty cash transactions, what journal do we capture that in?
Petty cash journal.
Yes, in the petty cash journal. And what document do we issue to reconcile that petty cash information? A petty cash voucher, yes, Impede, that is absolutely correct. And refill where? So a petty cash voucher. So petty cash is the easiest one because everything has the word petty cash in it. Okay, so that is generally the one students remember the best. Okay, and the last one, any transaction that cannot be entered into one of the conventional journals. So that means your cash journals, your credit journals, your petty cash journal. Must be recorded. In what journal do we capture any transaction that would not have fallen into any of those journals that I've mentioned? In the general journal, yes, Sandila and Nicholas, that's absolutely correct. Okay, do you guys have any questions on the documents or journals based on this exercise that we've done? Okay, you can just indicate with an emoji if you're happy. Give me a thumbs up or a smiley face. If you're not sure, then just give me a I'm not sure face or a think face. Otherwise, if you've got any questions or if you want me to repeat something, then just let me know.
Ma'am,
Yes.
May you please repeat what credit note means?
Okay, what a credit note is.
Yes, ma'am.
Okay, so just to recap what a credit note is. So a credit note is a document where we basically put information to show the original invoice that we either issued or received, if any changes were made to that document. We call that a credit note to say that we are reducing that balance on that previous invoice. Okay, so that is what a credit note is. Okay, so it's basically a document where you document the change to the original invoice. So how it has been adjusted to get to the new balance that you owe or that we have to pay to a supplier. Does that answer your question?
Yes, ma'am. Thank you.
Okay, so let's move on. So we're going to do this and then we're going to take a break. Okay, so let's have a look and see in the scenario what happens. Joan Porter started her retail business in 2006 with $1 million in cash, which she inherited from her deceased uncle's estate. The total operating income from the business exceeded the total operating expenses by $500,000 in the first year. Okay, so if your total operating income exceeds your total operating expenses, that is another word for your profit. Okay, so her profit in year one was $500,000. Against all expectations, Joan found herself with a major cash flow dilemma at the start of the second financial year. Her bank account was in overdraft, and within 6 months, her business was sequestrated. So if your business is sequestrated, it means that your business goes belly up. It is closed down because you do not have enough funds to pay your liabilities as they are due and payable. So now they're asking you, how is it possible that Joan's business could be bankrupt given the large profit she made in the first year? So how do you think, how could this happen? Why did she go bankrupt if she actually made a profit? So what do you guys think could potentially have happened? So what do you guys think? What could have potentially happened?
Ma'am, can you hear me?
Yes.
Could it have been that you might have overspent in the second year by any chance?
Okay, so remember we're looking at the beginning of the second year, so overspending in the second year would not be one of the reasons. If we were looking at maybe year three, then it could have been one of the potential reasons, yes. Okay, so remember we're in the beginning of year two. So only year one has passed now. Okay, Maria thinks it's poor planning. Maria, do you want to expand on why you think it's poor planning? Poor planning in what sense? And the rest of you are welcome to add on to Maria's comment of poor planning. So what do you think could have potentially led to her going bankrupt? Okay, so to help you get to an answer, I want you to think about that operating income and that operating expenses. Is there maybe more information you would require to be able to give me an answer? Okay, so Lesedi says the business budget. Okay, so Lesedi, you would be correct. So normally we have a budget and we look at what we would spend to sort of manage our cash flow as well. Now, in this scenario, she's actually made a profit, which suggests she did not overspend on her budget, because normally your budget is for a profit rather than a loss. Okay, let me ask you something else. What are the two ways we can buy or sell goods? So what's the two methods that we've been discussing so far? Okay, I think I've got you guys floored here. Okay, so let's discuss this. Okay, so Peter says his expenses might exceeded his income. Okay, so Peter, based on the information provided, the expenses did not exceed the income. Okay, Zandila is saying cash or on credit, refill with debit and credit. Okay, Zandila, you are on the right track. That is what you need to start thinking about. Was it on cash or credit? Refill with the debits and credits is just for accounting purposes. Okay, now refill where your answer would come in is in account when we do our accounting transactions. We sometimes do some transactions purely based on our accounting standards, which would result in a debit and a credit. But it's purely an accounting entry. It does not influence the cash flow at all. So that profit, that 500,000 that they're showing, is what we think our profit is based on our accounting records. It is not actual fact. It does not tell us how much money we've got in our bank account. And that is where Zandili's point on whether it's cash or credit is vital in your answer. So potentially what could have happened is Joan might have sold all of her things to her customers on credit, which was the income, and they haven't paid her yet. But she might have paid all her expenses in cash. So what that means is she paid cash, but she hasn't physically received cash. Now, let's say that debtor is unable to pay us, or they do not take the 30 days that they meant to pay us. That amount of effort she needs to go in to try and then collect that money could result that she needs to then write off some of those debtors, which results in more losses, which means less money is coming in. So at the end of the day, what happens is she spent more cash than what she got in. And that is how she could have ended up being bankrupt, even though she made a profit. So what does that tell prospective entrepreneurs? Is that they need to focus on their cash flows, especially in the first few years, in order to succeed their business, because that cash flow that they receive is what they plow back into that business to help it grow. Okay, do you guys have any questions on this? Do you understand how Joan could potentially have gone bankrupt even though she's been making a profit? So Maria, you are correct. It is poor planning, and it links in with Zandile's cash and credit scenario. Okay, so let's take a 10-minute break. If you guys can be back at 11, then we will continue the session.